Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Ladies and gentlemen, this is not a drill. We are entering a critical 48-hour window where a financial tripwire could be triggered. We're talking about a potential $20 trillion deleveraging event that has been quietly building for decades. What the mainstream news isn't connecting are the dots between this event and the new financial system being built in the background. Most XRP holders are watching the price, but they aren't watching this. What you'll learn today about what is happening in Japan could change your entire perspective. Stay right where you are. All right, welcome. My goal here is simple: to provide you with institutional-grade analysis on the macro forces shaping our markets. Today, we are connecting the dots between the potential unwinding of the yen carry trade and the strategic positioning of digital assets like XRP within a new financial infrastructure. Now, when I say 48-hour warning, I am not predicting a market crash on a specific day. I am highlighting a critical window where we are watching for specific catalysts and data points out of Japan that could signal the start of this major financial shift. It's about being prepared, not panicked. If you appreciate this level of transparent analysis, do me a favor, hit that subscribe button and ring that bell, because you need to stay informed on this. So let's break down the situation. For nearly 40 years, the global financial system has been fueled by what's known as the yen carry trade. In simple terms, large institutions borrow Japanese yen at near zero interest rates. Think of it as practically free money, and then they invest it in high-yielding assets around the world, like U.S. stocks and bonds. This has created a massive $20 trillion ocean of liquidity that has propped up asset prices globally. But the foundation is now showing serious cracks. Japan is facing immense economic pressure. Their GDP is contracting, and their national debt is a major concern. To combat this, they're being forced to consider raising their interest rates. We're already seeing their 40-year bond yield hit levels not seen since 2007. For market analysts, that 2007 benchmark is a major red flag. A significant rate hike in Japan could act as the detonator for the carry trade. It would force those who borrowed yen to rapidly sell their global assets to pay back their loans. In effect, it would be like a global margin call. Now, here's why this was more than just a Japanese issue. That $20 trillion carry trade is deeply interconnected with other highly leveraged areas of the market, creating the potential for a contagion effect that some analysts estimate could exceed the 2008 financial crisis. First, you have what's known as the Treasury basis trade in the U.S. bond market. It's a complex strategy, but the key takeaway is that it involves immense leverage, sometimes up to 100 to 1. It's highly sensitive to sudden liquidity shocks. Next, look at commercial real estate. There's nearly $1 trillion in loans scheduled to mature at the end of historically high rates. Then you have corporate debt. We've seen over 694 major corporate bankruptcies this year alone, which is a 12% increase over pandemic-era levels. This potential stress touches everything from regional banks to private credit markets, and it's all amplified by the extreme speculation we're seeing. For example, zero-day options now constitute over 50% of the S&P 500's daily volume. Any single geopolitical event, like an oil price shock, could be the catalyst that forces the Bank of Japan's hand, potentially accelerating this entire deleveraging process. So if the legacy system is under this much stress, the logical question is, what's the alternative? This is where that thesis gets interesting. Major economies don't typically allow a systematic failure without having a next-generation system in development, ladies and gentlemen. The analysis suggests Japan is strategically pivoting towards technology to build a more resilient economic future. And a key part of that thesis involves the technology being developed by companies like Ripple, with XRP serving as a potential bridge asset, folks. This is not just retail speculation. We know Ripple is actively collaborating with the Bank of Japan on modernizing payment infrastructure. The goals are clear, folks. Achieve faster payments, enable real-time foreign exchange settlements, and unlock trillions in otherwise illiquid capital. This is all being built around the ISO 222 messaging standard. This is essentially the new universal language for global finance, and XRP is natively built for this standard. This is a major reason why the technology is reportedly being explored by institutions like JP Morgan, HSBC, and the Bank for International Settlements. They're all working on the future of finance, and this technology is part of that conversation. The recent launch of XRP futures and the significant inflows into new XRP ETFs, reportedly around 600 million in just 11 days, these are indicators that institutional level players are beginning to position themselves within this evolving landscape. This brings us back to the core idea of this video, ladies and gentlemen. The time for awareness is now. The market may be volatile, but the underlying macro trend is what matters. This is the time to zoom out and understand the fundamental shifts that are underway. This is why I'm sounding the alarm for you to be aware of these interconnected events. The unwinding of the yen carry trade, should it happen, will likely be a chaotic and volatile event. But on the other side of the volatility, a new financial infrastructure is being established. Assets with real utility and regulatory clarity are best positioned to be part of that future. In my view, market dips caused by macro fear are often opportunities for those with a long-term, high-conviction thesis. This is the moment to fortify your understanding, not to react emotionally. If you're getting value from this detailed analysis, please hit that like button. It tells YouTube that this kind of detailed content is important. And ensure you are subscribed, because in my next video, I'm going to break down the specific on-chain metrics and market signals that could provide further confirmation of this thesis. You won't want to miss it. To be clear, one final time, nothing I've said today is a guarantee. It is an analysis, a thesis, built on data. My goal is to empower you with information so you can make your own well-informed decision. Many analysts believe we're on the verge of a great wealth transfer. This transfer will likely flow from those who are reactive to those who are educated, patient, and prepared. It's about understanding the big picture from Japan's bond market to the technology that will power the next generation of finance. So, ladies and gentlemen, continue to educate yourself, think critically, and separate the signal from the noise. Thank you for joining me and the Crypto Republic for this critical update. Stay sharp, stay informed, and we'll see you in the next video. As always, ladies and gentlemen, this content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions, always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or You can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. If this opened your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.